let's not disrupt harvest, but let's keep track of that for sure.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. It's always a pleasure to have you with us. Make sure you like these videos, subscribe to the videos by clicking on the bell icon down below. That way we can let you know when we post a new update, and share these videos with others. And you know what? I can tell you've been doing that, because we continue to grow at one of the most rapid rates of any ag podcast out there. Well, today I have Joe Kemp with me, and he is a market analyst and a broker with Comstock Investments. Joe, it's nice to have you on as we look at Tuesday's market action, but I can't say that it was really all that great of a trade in corn and soybeans anyway, especially in the soybeans. What happened there? They seem to be really choppy this week.
Soybeans led the way lower and choppy because they were the best performer to start off the week. Corn a bit caught in the middle, as it has been so often lately, where yesterday it was the wheat that was dragging the corn, and corn ultimately finding some upside swing into close because of the good rebound for beans. But yet again, that given back here today, also given back key for the November soybean contract, that $10 mark that had been bested last week. That was a real positive sign that we were able to close above $10 here recently. Not today, and it's a bit of a pause in what had been a less bearish, certainly, and slightly more bullish attitude these last couple of weeks. I think one thing we have going on here, you look at the soy complex, you got to have this influence spilling over from the crude oil being down almost $3 a barrel. We've had all of the talk about the oil really driving the market. And it's not just crude oil, it's palm oil, it's canola, it's everything that goes into the soy complex here, knowing that we need really good processing demand to bolster the export draw coming into this harvest. That was the negative point of the day for sure.
Now that we have a 9 handle on the front, psychologically, when traders look at that, does that make them freak out a little bit when you have a 9 again?
In some sense, yeah, there's only the recent lows to go test before you drop further down to really the 8 range, because of, we talked before, the 2019 lows for soybeans would take us all the way back to below $9. You don't have much else again on this chart before those points. So the even money $10 mark was important. Now, not much to give way to any buying interest unless you could recapture that mark. Certainly, the technicals are important in the short run. What could change everything would be the fundamental influence of the report coming up. So that'll make or break this recent technical action, in my opinion, whatever comes this Thursday.
Corn seems to just be drifting along ahead of the WASDE report coming out later this week.
Like mentioned, oftentimes caught between the soybeans and the wheat, going in opposite directions. For corn, there's been a more friendly influence heading into this crop report because of expectations that there's more room for the national yield average to go lower relative to soybeans. Soybeans had been doing their own things, rallying again on the reversal of what we're seeing now, which was actually some positive action in the oil markets. Again, talking about canola, palm oil, all of those competing products had been boosting interest in the soy complex as a whole, that being erased. So now corn not having the bullishness from soybeans, some skepticism overall about the USDA helping out and getting us down to earth on these production numbers this month. And so that's the attitude still carried by the speculators, remaining bearish, albeit less than before, but still widely carrying a bearish bet against that market.
So in general, do you think the trade is expecting shrinkage in the size of the corn and soybean production?
In general, that would be the case for corn. The average trade guess looking for about a half a bushel reduction from last month. That would still leave it cleanly at a record national yield average. Also, though, the harvested acreage estimate expected to be lowered slightly from last month. That could go a long way in reducing the carryout estimate. The average trade guess sees it close to, but not below yet, the 2 billion bushel threshold for the new crop. We're watching that really closely because of any production estimates going lower. If that's matched with some higher demand, even if it's old crop carrying into new crop expectations, we should see that potential eventually for the carryout to drop towards that and eventually maybe test 2 billion or below. The opposite again on soybeans, we're not so convinced that bean yield's got to come down. Instead, the average consensus estimate coming in is for a 1/10 of a bushel increase. And so averaging out, there are those that would expect it slightly higher and still those that would see it slightly lower. We've gone through a lot of weather challenges, not only throughout the whole season, but particularly over this last month since the August yield estimates were reported to us last month. And so that would be reason to believe they should slip. Yet again, the crop progress report out after the bell yesterday, no deterioration in the soybean ratings for whatever they mean at this time of the year. It was still expected we should see some movement lower there, 65% good to excellent. That was part of today's negativity as well, that we are checking ourselves heading into the report.
Well, it kind of came out of nowhere, but by the time we get into overnight and tomorrow, we're looking at Hurricane Francine. It just kind of suddenly developed in the western Gulf of Mexico. It's supposed to drift up north and northeastward toward Louisiana. And gosh, the track of it at last check, it'd go right up the Mississippi Valley. Well, we have had low river levels, and that has been a problem. Barges couldn't even fill up here lately. I guess maybe that would help solve that issue. It would also help relieve some of the drought that we have had in the Mid-South region and the Deep South region. On the other hand, I'm a bit surprised that it didn't help the market because it's not going to be great for corn and soybean harvest.
No, it won't. We'll start with that, what you mentioned about the Mississippi River, much needed, of course, as we head into the harvest season, as active as we are pushing grain down the river system into position at the Gulf for export. It's really key that we don't have the same problems that we experienced the last 2 years with fall river problems. The last 2 years, it was in October when we got enough moisture to have that behind us. We don't want to have these issues persist any longer than that if they are going to be a problem at all, which, as mentioned, they already have been with some restrictions around Memphis because of the low water levels there. Lower tow numbers allowed. The draft restrictions are in place here when the river gets down to these levels, something that the hurricane could certainly help with. But then on the flip side of it, the harvest effort. Now, you're not going to see much in the way of disruption for a state like Louisiana at the Gulf. They're pretty well 85-90% wrapped up on the corn harvest. They are going to not want to see their beans underwater, depending on the severity. But really what we'd watch for is further into the southeast, the mid-south, and up into the southern coast, Atlantic coast, where you have the Carolinas, some places where they've got enough harvest still to go that it can be a problem, not just if this one hits here coming up later this week and into the weekend, but if they still tropical storms and hurricanes continue to develop through the rest of the season these next few months, so that there are delays or problems with quality on this crop. This is something we think about because it's happened before. You can go back to 2019, even on and off throughout 2020, 2021. We had in 2022 these huge disaster relief payments paid out by the USDA in part because of hurricanes. Those came at just the wrong time, and we don't want to see that happening. A little bit of moisture in the river system would be great. Let's not disrupt harvest, but let's keep track of that for sure.
I thought maybe we'd see more of a bump in the cotton. A little bit, but not that much, I guess. But I did see where the rice picked up 20 cents today. That would be in that November contract. So maybe that's a sign.
That's right. Anytime you talk about the Delta region, you're going to think about rice and cotton, especially at this time of the year. For cotton, it may be the demand end of it outweighing the more negative and limiting what would ultimately otherwise be some upside reaction observed early on in the session today. So it is back to looking at, say, the stock market, it being mixed, but the Dow lower, coming off of last week, the big break lower for stocks and the nervousness about the economy, these big economic reports coming up this week on inflation, consumer sentiment, the Fed meeting, and the decision on interest rates next week. All of that still stirs up some concern about global demand as a whole, U.S. consumer demand, And that's something that we know the cotton in particular is sensitive to. And add to that the link with cotton and China and their demand being questioned as of late. It's a limiting factor for now, but if it continues, these weather issues down there would be something we think could be more bullish for sure.
Want more? Sign up today for our premium content. You'll receive our reports twice a day, plus every morning, an in-depth market analysis with Eric Relf. Every afternoon, you'll receive our daily podcast with Marlin Bohling. The first month is only $1.
Well, you brought up a good point. The Dow had been sharply lower during the day. After the lunch hour, it did come back quite a bit. It was still lower, but not like it had been earlier. Now, I see on the livestock trade here where the cattle market closed lower, I should say the fed cattle. Looking at the feeder cattle market, it was a little higher. The hogs were just kind of treading water, if you will. Mainly firmer, I guess you would say, on the lean hogs. Does that trade mean anything today here on a Tuesday?
I think it's emblematic of what we've saw more and more of lately, which is the sensitivity to these outside financial markets. This can rewind. About a month ago, we had the huge break. It's a 3-day sell-off in the stock market. Official correction / almost bear market territory for the NASDAQ. Overall calamity that really pressured the cattle as well. And when you split out the differences between the cattle in particular, but the hogs included, we want to look at the speculative positioning. And we know that while they've whittled it down, the hedge funds remain net long in the live cattle, but they've recently turned net short in the feeders. So in this instance, there's a general unwinding, still a stepping out of the market when we have these down days for the stocks and the nervousness out in the economy. That on a day like today would maybe be more impactful or negatively so for the live cattle as those speculators continue to liquidate positions, whereas they don't have those big bearish bets already stacked against the feeders. Relatively speaking, they've gotten down to new lows quicker and further than the live cattle. And so that might explain some of the strength here that we're seeing between the feeders relative to the live cattle. The hogs, they've been treading water and trying to decide between, if economic nervousness is good for pork as a substitute for beef, or if it's just overall a slowdown that needs to be, more heated as a potential bearish factor.
I'm curious, have you been fielding a lot of calls here lately from, let's say producers that still have a lot of old crop grain in the bin, and now they don't know what to do because they have the new crop coming in out of the field here before long?
That was certainly the case in a big way leading up to the end of last month, because these September grain contracts went into the delivery period, and that triggered those decisions on what to do with old crop contracts, basis contracts, the storage coming due again at the end of the month and rolling into a new marketing year. We know the row crops, corn and beans, are on a marketing year that starts in September and ends in August. Well, we've transitioned through that, so we can potentially have less of the catch up, old crop, give up, clear the way type selling that we have observed more of, although it's still going to be a factor. And it bleeds into the same or similar questions that farmers are asking us, which is not only what do we have to do with some of this old crop that's still unpriced, but what about these bushels that we know we're going to move here at harvest across the scale we just don't have the room for, or that we want to sell to feel more comfortable hanging on to the rest simply. And everyone's situation's unique. That's where we start. But we dig into looking at what's been sold already, what's the plan for sales here into harvest and just after, and then coming up with strategies to not only think about re-owning some of the sales that we've just made or are about to make during that harvest period, but then taking advantage of opportunities that might arise if the spreads are wide like they are now and offer good carry premiums that might necessitate hedging decisions, not just right now, but later delivery for future contracts that are higher priced. lot of decisions and conversations like that for sure going on right now as we approach harvest in so many places.
Yeah, and that's why our premium content is so valuable for those that aren't aware of it. Yeah, we have a premium segment, and it has morning updates, morning videos. It has afternoon newsletters as well. So yeah, we have a trial right now for $1 for a month. Might be worth checking out here during the busy harvest season, because we don't know what to do with the old crop or the new crop. So
we talked about that last time, right? That the premium service will just address this issue on the old crop, and we're doing the same as I talked about with the new crop decisions coming into harvest with those first bushels to enter the market. And we listed out some of these options, like here's what you're going to be considering at this point, but then you're unique. So let's have a conversation about the details of each one and why it might fit or not for you. Other reports have come out on the same topic to talk about the difference in regions and how stark they are this season. You've got the really firm basis in the West, the really strong feed demand to the Southwest, the competition with trains moving corn to Mexico. You've got better market share for exports going out of the Pacific Northwest. In the East, well, we got these Mississippi River issues. We got more of the old crop left. We've got relatively bigger crops in a lot of areas, corn-wise, for sure, projected with records in Illinois and Indiana. So that's the consideration where we say everybody's unique, but we're certainly putting out there, here's your options, here are some different things to consider, and let's have a conversation about what fits you.
Yeah, this is more of a broad overview. When I do these podcasts every day, that gets into more specific, more targeted information, and it's more timely as well because we do it multiple times a day. So anyway, thanks for explaining that. I appreciate that, Joe, and thanks for the content today. Always good to hear from you. Joe Camp is with Comstock Investments, and appreciate you joining us once again. For producer Brianne Hendrickson, I'm Marlin Bohling, and we'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.